Today, I'm going to take you inside one part of my stock portfolio. I've been building up positions in deep value Asian stocks that pay tax-friendly dividends, sometimes in battered stocks and sometimes in boring stocks. Here's what I bought. I thought it made a lot of sense when someone recently told me that Asia is a place to invest for deep value. A lot of people want to go and invest in the United States. I'll talk in a moment why that's not as friendly if you're outside of the United States. There's actually two reasons. There's certainly some reasons to invest in the US, and I do have stocks in the US. I have stocks in Europe. I have stocks in Australia, in various places. But for me, what I like about Asia is if you're leading a tax-friendly lifestyle, in many cases, you have no dividend taxes, no capital gains taxes, you have higher yields. And I've talked in a separate episode about how, for me as an entrepreneur, I want a more boring part of my portfolio in my personal assets to where that can pay me some income, I can live off that income, I can reinvest the business's proceeds into the business. I think if you get to a certain point, you want a part that's very boring. And I think Asia, even if you go to Singapore and talk to Singaporeans, they'll say that investing there is a bit boomerish. So perhaps I'm a bit of a boomer for investing in stocks in Asia. On the other hand, you've got some of the stocks in China. I don't have any investments in mainland China. Again, I'll go through the portfolio in a minute. But in Hong Kong, bought some stuff about a year ago that has had a little bit of growth, big dividend yield. Again, for this part of the portfolio, that is the goal. Now, if you are not a U.S. person, you don't live in the United States, you're not a citizen, you're not a green card holder, you're not only subject to some estate tax issues, if not properly structured, but most people aren't, on your U.S. situs assets, you're also going to, if you're living a somewhat tax-friendly lifestyle as I am, you're going to pay a higher rate of dividend tax compared to 0% in many of these Asian markets. And so if I just look at net yield, I think the thing is a lot of people say to themselves, well, you got to pay taxes. Well, in Singapore and Hong Kong, you don't have to pay taxes on dividends or on capital gains. Now, some markets like the US, you don't pay taxes on capital gains if you're not an American. If I'm looking at cash flow, I want net. The fact that, a stock in the US pays me 3%, and after tax, that's 2.1%. If there's a similar stock in Singapore that pays 5%, the fact that they don't tax me that counts. Like, money in your pocket is money in your pocket. And if you're investing in the US and other Western countries, you will have less money in your pocket, with the added benefit, if you're investing in the US as a foreigner, that there could be estate tax issues and they could take a bunch of your money when you die. That's something that our tax professionals here help people actually avoid. It's not that hard to structure around, but most people are not aware of that. And in fact, the brokerage houses will tell you, in what we've seen, not to worry about it. So let's talk about the portfolio so you understand why I'm invested in Asia. This is the part of my yield portfolio that is deep value. I get some of the highest yields. Singapore is the crown jewel. To me, it's stable. It is a little boring, which is good for this. I like the geopolitical neutrality. What's the portfolio look like? In any yield portfolio, you're going to have financial companies. We have banks, DBS and OCBC. There's actually a great Singaporean YouTuber who talks about his stock portfolio there. And he bought all the big three stocks during the pandemic. These have done very well. You've got yields that are close to 6, if not over 6%, tax-free. These are some of the strongest banks in the world. I think OCBC is a very well-run bank. Obviously, none of this is investment advice. This is just what I'm doing. You have to do your own research. But OCBC is a well-run bank. DBS is the strongest and the biggest of the banks. UOB, I have personally not liked as much for the service. It's a strong bank. I just haven't enjoyed the user experience as much. And kind of for that reason, I excluded it. I think that there's something kind of in the Peter Lynch model of buying stocks. Like, if you just don't feel it, don't buy it. There are conglomerates based in Singapore. Some of these have exposure throughout Asia or even throughout the world. Keppel and Jardine Matheson. Keppel's actually been a great growth player in the last year. It's up, I think, about 30-some% in my portfolio. Jardine Matheson, not as much. It's been a bit of a laggard. So those are two that give you kind of broader exposure to all sorts of different things, whether it's ports, whether it's automotive, whatever. Tax-free dividends. Actually, Jardine Matheson is in USD. And so if I think for me, the Singapore dollar exposure, I like the currency, but if you want US dollars, Jardine Matheson is in that. It's a little beaten up recently. That's the one laggard in Singapore for me. Utilities and resources, recently felt more comfortable with Singapore Telecom. looking at the growth of some of the mobile players they own around the region. In Singapore, I'm not as excited about that business, but the Philippines, and they own stakes in a number of players across Asia. So Singapore Telecom is decent. Looked at and passed on Singapore Airlines. I always think of Warren Buffett saying he's got a hotline to call when he wants to buy an airline stock and someone talks him down. And I do think that airlines, as much as Singapore Airlines is very well run and people pay a premium to fly on them, stay away from airlines. There's a few weird players. I know some people who invest in Asia, some of my friends like Wilmar, Bhumitama Agra for someone who's like pure play, kind of small cap agriculture play, is a big dividend payer, I think up at like 9%. So banks, conglomerates, utilities, and resources in Singapore. To me, I like the region. You've got players like some of these agricultural stocks that are more based in places like Indonesia. Indonesia is, to me, a growth market. Interesting to see what happens with their new president. Not as excited about the new president from what I can initially tell, but I still think the country has a lot of growth prospects, and I have a separate Indonesia fund, which is not dividend focused, which has actually done very well over the last couple of years. So I'm bullish on Indonesia, and you've heard me say that. Other places in Asia, Japan, great market to invest in the last year. You've seen some of the trading houses that Berkshire Hathaway bought are up like 50% in the last year. The Soga Shoshas like Marubeni, taking a position on that now. He's in I think 4 of them, like a Itochu. For me, the biggest player has been Toyota, and I'm almost looking at removing this from my my dividend portfolio because the yield's down to 1.8 or 1.9%. There's a little bit of dividend withholding tax in Japan, and the stock's up like 83% in the portfolio in the last 13 months or so. It's been an incredible stock, outperforming all the other Japanese stocks which have done well. So Toyota's been a good player, but I like what Berkshire Hathaway's doing on some of the trading houses, or they call them the Soga Shoshas, like Marubeni, which I'm adding in. And so, Warren Buffett is someone that I have followed a lot. I like the value philosophy. Obviously, Berkshire Hathaway's done very well also. And so, he lives in Omaha. And he's very bullish on the United States. I decided that the modern version of what he's doing is you don't want to live in the United States. And that's why for many years I've been out of the United States. For about close to 7 years now, I've no longer been a US citizen, which means that when I go to a place like Singapore and I invest and I get tax-free dividends, tax-free capital gains, that's powered by the fact that I live a tax-friendly lifestyle. I don't live in the United States. I don't pay taxes in any high-tax country, at least certainly on my foreign income. And so what we do here at Nomad Capitalist is help people do what I've done, their own version of it, by figuring out where they can go. And if you're an investor, there are some specific things you want to keep in mind for where you want to move, particularly if you're a dividend investor. And Nomad Capitalist can help you do that. If you have a large enough portfolio, it would be well worth it, not only for the lifestyle benefits, not only for the personal freedom that I think comes with living outside the Western world, not only for just the ability to have a second residence and second passport as a plan B, and also if you're an investor, I think it's good to see some of these markets you're investing in. I live in Asia a couple months a year. I have a home in Malaysia. And I like seeing what's going on in that region. I like talking to people. I get ideas about what's happening. I should have bought a stock that was being talked about in Malaysia a year ago. It's up 450%. And people were talking about it around the club. We can help you at Nomad Capitalist move somewhere where you can plug into the tax advantages where not only your investments but your business are dramatically lower taxed, if not zero tax at all. Just go to nomadcapitalist.com/apply. We've talked about how Warren Buffett has his philosophy. It worked for when he was coming up in business. I don't know that it works anymore. Now, back to the portfolio, but do keep that in mind. If you want to power your portfolio, you'll have a lot more money to reinvest if you're dramatically lowering your taxes, and that's what we can help you do. So, Singapore, Japan, South Korea, taking a stake in Shinhan Financial, relatively high-yielding financial stock. I think there's some good Korean financial players. I've got a friend who likes Woori Bank, and they've got a presence in emerging markets like Cambodia, but Shinhan Financial, I think, well-run bank in South Korea. Generally not doing a lot in Japan or South Korea. Obviously kind of Japan up until the last year or so, people would have marked for dead. South Korea, interesting place. Again, partially the tax friendliness in Singapore is very attractive. The English speaking is also very attractive. I think just easier to understand market, but a couple stocks in Japan and South Korea that I like. Hong Kong. I know a lot of people are like, oh, I don't want to be in China. I got more into Hong Kong after things came down from 2021. Bank stocks, Bank of China, ICBC, up a little bit on those. Looking at ICBC in the list, we talked about some of the 100 safest banks in the world, and ICBC among those big 4 banks is actually among the lower. I look at Agriculture Bank of China, and I feel like maybe I like the metrics on that one better. Maybe I'll swap that one out. But very solid dividend payers. If you saw a bank in the U.S. that was paying that high of a yield, you'd be concerned. Like they were heading towards some kind of bank failure event, like Signature or Silvergate last year. But you're paying high, you get higher yields in China because these financial institutions have plenty of cash flow, and they need to encourage people to buy stocks because it's not as much of a tradition in China. And so you can get some solid dividend payers with those financial institutions. The big loser is Ping An Insurance. That's been a real dog. Solid dividend payer, but it's been probably it is certainly the worst performing stock by far in the portfolio. So Toyota, it's like one of the best performers of the yield portfolio in total, certainly in Asia, up 80-some%. I think Ping An down like 25% or something. That's been a dog. But decent dividend player. I do think, the metrics, I think it'll be fine long term. Again, conglomerates, I feel like in Hong Kong, the conglomerate's a bit more international. CK Hutchinson, big presence in Europe. So that's wealthy, one of the wealthiest guys in Asia is involved in that. Swire Pacific, Coca-Cola bottler, owns a bunch of stuff in Hong Kong and around Asia. Those are somewhat down a little bit, but through kind of dollar cost averaging have actually managed to do relatively well in those. I think that some of these things in Hong Kong have gotten beaten up sufficiently to where it's worth it. And so utilities, Hong Kong Electric, flat on that, solid dividend payer. The feast or famine business of Costco shipping, minor player. I like that they a couple years ago bought this OOCL, the Orient shipping line. Obviously not a solid dividend payer, and it is a feast or famine business, but very solid yield in good times. And I think even though China is seeing its share of the global export market slightly reducing in kind of the same way as the U.S. dollar is seeing its share of global reserve currencies reducing, I think it'll still be very solid. And I think that on a geopolitical play of more stuff from China being shipped to other markets that they work with and maybe losing a little bit of share in the West, there's a market for that. Going into Hong Kong and China gas, which has gotten thoroughly torched in the last 5 years, I think that for a yield portfolio, I see a good entry point there, so I'll get into that. Now, so those are the main 4 markets that I'm in Asia. And again, let's talk about Malaysia, for example. I live in Malaysia. We're hosting Nomad Capitalist live in Malaysia. We're actually hosting it at the Majestic Hotel, which is owned by a company called YTL. Their YTL Power is the one that's up. It's through the roof at the last year, and that was the one that they were talking about. All the YTL companies have done amazingly well. There's been a big rebound in a few of these Malaysian equities. But you can own YTL's Hospitality Trust that owns the Majestic Hotel and all the other hotels that they own. So if you want to learn about this stuff, we are actually bringing together emerging world experts from all over the world. And we've got a number of speakers and panelists who are actually emerging markets investors. We've got about half a dozen or more of them who are going to be speaking at this year's Nomad Capitalist Live. So just so happens that the hotel we're at is owned by a REIT you can buy. And it's a REIT that's kind of come back, obviously, from the COVID days. If you want to learn about Nomad Capitalist Live and how you can join us for 4 days and learn all this global citizenship stuff and learn about investing, go to nomadcapitalist.com/live. I do like the YTL Hospitality Trust. The challenge with Malaysian, Thai, Indonesian, and Indian stocks is it is harder to access them. So I have a bank account in Malaysia as a resident of the country, and I can buy them through that. But you really can't buy them through any kind of international brokerage house. Even in some of the Singaporean banks, you can't buy them. So if you want access to some of these more exotic markets in Asia where there are some of these crazy returns, you either want a bank account in Singapore where they have funds, like the Indonesia fund, the Thailand fund, the India fund, and India's been a good performer for me, for example, but you can't go on like Interactive Brokers and buy Indian stocks unless you're an Indian resident. That's a play for being diversified. Having the Singapore bank account to access the funds, having the Malaysian bank account or the Thai bank account to access particular stocks locally is helpful. Indonesia, I'm not as sure about how you can buy stocks in those banks. We deal with some Indonesian banks for our clients who live there on a Kitas visa or whatever, but I'm not sure that they allow too much investing in the local market. But the point is, you can access that with that local banking infrastructure, which is why just knowing how to buy the stocks isn't always important. Anyway, that's interesting on Malaysia, and you can also own part of the Petronas Towers. They have a KLCC property REIT, which I was actually unaware of until recently. So those four markets, those more exotic markets with more controlled currencies, not available unless you do that. Let's quickly talk about the REITs, real estate investment trusts. Most of these are in Singapore. I think Singapore is one of the world's biggest market for REITs. What's nice about it, again, they're not all invested in Singapore. Some of them are invested in other places in the world, but your yield is still tax-free. Maybe some tax implications they take care of for you, but when you get to cash, it's all cash in hand. So for a yield portfolio, I'm big on REITs. I actually believe in office space more in Asia than I do in the US. I was briefly in the Vornado Trust, for example, where they had a bunch of New York office space. I decided very quickly, this is not for me. I don't believe in the future of New York office space. Maybe they'll do some conversions to residential, but I think Asia, much more be in the office kind of presence. So that's just the culture there. So Capital Land Commercial, Capital Land Ascendus, Capital Land India Trust with data centers and logistics, Mapletree Industrial and Logistics. So in terms of shipping stuff and logistics services and industrial properties and data centers, a lot of presence there. I think Capital Land Commercial, and I took a very small position in the UI REIT, which owns like One Raffles Place and properties in central Singapore. I believe in office space in a place like Singapore, and not so much. I don't believe so much in hospitality. Don't believe so much in retail. The one dog that I got out of was Suntec REIT, which owns a number of REIT, kind of just, for a REIT, you want to own like top properties. You want to own some marquee properties. Just owning like random malls and random places just sounds like a terrible idea to me. And then in Singapore also, the Cromwell REIT, if you like, kind of pan-European logistics space, that's interesting. And so you've got, fewer regulations, the taxes are clean, like everything's just easier to own that European REIT, just for estate tax purposes, for just for getting the yield in your pocket. It's nice that there's a REIT that invests in stuff all over Europe, from I think Poland to Germany and UK, based in Singapore. So lots of REITs based in Singapore if you're someone who likes REITs. Less volatile than some of the US REITs, I think, in general. If you look at like Realty Income, for example, it's been a bit of a bumpier ride than a lot of the good Singapore REITs. That's the Asia Dividend Portfolio, basically across those, I think it's 4 countries, a little bit of exposure in the non-yield portfolio to Malaysia. At Nomad Capitalist, we can help you. We're not investment advisors, so we don't stock pick. This is just my own portfolio. I do this entirely separately from Nomad Capitalist. I'm just here to tell you what I've done. Please do your own research, build your own portfolio. My objectives are certainly different than yours, and I've tried to lay that out in a separate episode. We can help you with where to move, where to structure your assets. Do you need a trust? Do you need a holding company potentially if you live offshore for some of these assets? Where do you bank? Where can you get some of those more exotic funds? We don't choose investments for people, but we can help you put the infrastructure together. And in some places, if you buy stocks, you can actually get a residence permit by buying enough stocks. Potentially, you can even work towards citizenship. Not so much in Asia, but that's what we help people do. So go to nomadcapitalist.com/apply, learn how we can help you keep more of your own money and build a plan B in the process. And if you want to learn about what the experts in all these different markets have to say, we would love to see you at Nomad Capitalist Live.